Our next guest is also optimistic, saying the company is laying the groundwork for a good year, and she's got a $140 price target. Let's bring in Jessica Reif Erlich, managing director at B of A, covering the media space. Jessica, it's good to see you. And look, Disney and Comcast are the only players other than Netflix with any kind of scale in terms of market cap here. So is that where we should expect people to put up the biggest fight?
Not clear about the biggest fight, but yeah, I mean, Netflix had an amazing quarter, of course, and Disney had a really solid quarter.
Yeah, so I think we look at this and say, okay, 124 million subscribers for total paid Disney Plus. Netflix is over 300 million, and who's next after that?
I mean, they're subscale players: Peacock, Paramount Plus, Max. Max is still growing and rolling out internationally, but there's a lot going on at Disney as well. They're going to roll out ESPN flagship in the fall. They are starting to bundle all of their services. So they actually, Fubo is coming online and will be part of their service as well. They will be in all the skinny sports bundles that are coming out. So Disney has scale, Netflix has scale, and a couple of the tech companies do as well.
Right.
And then everybody else is in a different category.
The December Nielsen report, it had YouTube highest sort of share of viewing time, 11%. I think it was maybe Amazon. YouTube next, then Amazon. So, Disney is doing well, but it's also up against $2 trillion market cap companies.
Totally true. But their content cycle, I mean, they are really focused on content. They've got some really big movies coming onto the platform in the spring, Moana 2 and Mufasa, and that always drives subscribers. They are working on their consumer interface. That's an area of spending, and they noted on the call today they need to make that more dynamic, which is definitely true. You see that on Netflix's homepage. So there are things that they are doing to ramp up, but it's pretty clear, like the numbers today were actually very good. The streaming numbers were better than expected. And our view is that they will significantly beat guidance in that area and probably some others as well.
You think they're going to get to 140 as a standalone company? I mean, should they consider any kind of consolidation if some of those, as you called them, subscale players are, just going to struggle in this fight?
Right. Well, this year should be the year of M&A, hopefully, with the Republican sweep. Will be an environment that's a little more friendly to these kinds of things. And most of the companies in media will have to change their asset mix. Disney is in a different category, as is Netflix. But Netflix actually could scale up in IP as well. Disney has all of the content they need. They have a really good range of assets, so they are less in need of acquisitions. Not that they couldn't do a tuck-in, but they've made acquisitions throughout the last decade or more and are in actually a really good place. Now it's all about execution. They've had a pretty tough hands with the strikes, the writer strike, the actor strike. Obviously, COVID hit everybody. But now that they're coming out of it, they're operating, from a better position. And in our view, for Disney specifically, numbers are going up and probably well above the guidance the company gave today.
So if Disney is doing well with its current portfolio, it's got, again, the biggest, maybe $200 billion market cap of the rest of these players, but it's not necessarily looking to be acquisitive, then what happens to the rest of the industry? Comcast is saying that SpinCo is going to be the acquisitive asset, but Comcast itself is the one that has the balance sheet and the heft. I don't know if you saw Wolf Research's note this week where they say Comcast should keep going. They should spin off NBC. They should spin off Peacock. It should be 3 companies, not just 2. Again, I'm just trying to envision who has the capacity to kind of roll up the rest of the industry.
But that view on Comcast is not new at all. We've been writing about it for quite a while. Our view and in writing is that there will be a cable network roll-up. The big surprise when Comcast announced SpinCo was that Warner Brothers Discovery didn't announce it first. But given Comcast's balance sheet, it makes perfect sense that they are the roll-up vehicle because they're operating with that strong balance sheet and can afford to make acquisitions. So SpinCo will happen, or Comcast SpinCo will happen later this year, and that will get the ball rolling. Warner Brothers Discovery announced a prelude to a restructuring, and so there's likely to be a split there as well. If there's a standalone Warner Brothers studio, film and TV with Max, that would be a highly attractive candidate for tons of companies. We've written about this, and NBCU might be an acquirer, but there are others who could be interested as well. And as far as cable, again, something that we've highlighted, John Malone said on CNBC several months ago, that there's no reason why Charter and Comcast shouldn't combine. There
Yeah.
are benefits to scale, and the whole cable industry has gotten smaller, but also they're competing with bigger,
Right.
not only telcos, national telcos, but international platforms like
Yeah.
Amazon and Google.